Welcome to JAX's weekly updates from 18th June to 24th June 2016. Let's go through the important updates. First one, Establishment of Fund of Funds for Startups, FFS. The Union Cabinet funds registered with SEBI, which would extend funding support to startups. This is in line with the Startup India Action Plan unveiled by government in January 2016. The fund is expected to generate employment for 18 lakh persons. The next number 47/2016, no deduction of tax under Chapter 17 of the said Act shall be made on the specified payments made by a person to a bank listed in the second schedule to RBI Act or to any payment systems companies authorized by RBI. Accounts, charges for warehousing services for commodities, underwriting service charges, clearing charges or MICR charges, including interchange fee or any other similar charges by whatever name called, charged at the time of settlement or for clearing activities under the pay. This will come into force on 17th June 2016. Next one, eNPS facilitates non-resident Indians to join and subscribe to NPS online. National Pension System, that is NPS, is a defined contribution-based. NRIs could open NPS accounts only through paper applications by approaching the office of the banker. Through eNPS, a subscriber will be able to open an NPS account from his home itself through internet connection and Aadhaar or PAN card. Further, NRIs will be able to be brought under automatic route for under new FDI policy. Most of the sectors would be under the automatic approval route except a small negative list. Thus, India is now the most open economy in the world for FDI. The sectors where 100% FDI is allowed in animal husbandry, etc. Then, disclosure requirement of assets while filing ITR. The taxpayer, either an individual or an HUF, have to furnish additional details of assets and liabilities in case the taxable income exceeds rupees 50 lakhs in the year. For this purpose, profession. In the second category are the individual and HUF taxpayers who have business income either as a partner of a partnership firm or as a proprietor of any business or profession. The taxpayers falling under the first category shall submit details of immovable. The details of vehicles, aircraft and boats are also required to be furnished in the income tax return. The amount of liability incurred against any of these assets is also required to be disclosed in the schedule of assets and liabilities. The taxpayers falling under the second category in a or saving bank account. They also have to provide details of cost of insurance policies, loans and advances given, and investment in shares and securities. Additionally, they have to provide details of archaeological collections, drawings, paintings, sculpture, and any work of art. If an amount or a gift is received from a person who is not a relative and that too in conditions that are not specifically exempted, that is at the time of marriage and so on, then this would be taxed if the amount crosses a specific limit. This limit is rupees 50,000 in a year, and this would thus include and cover both immovable property as well as other property. This also includes a situation where there is allotment of shares post demerger or amalgamation of a company. But now, when the shares are received through a demerger or amalgamation by an individual, this would not be considered as a gift for the person. Then next, CBDT has released the third version of Guidance Note on Foreign Account Tax Compliance Act and Common Reporting System. India has joined Multilateral Competent Authority Agreement to implement automatic exchange of information based on common. The year 2017, 56 countries including India will start sharing tax information on automatic basis, and the number will increase to more than 100 in the year 2018. India has also signed intergovernmental agreement with USA for implementing the foreign account tax who have stashed assets in foreign participating jurisdictions. This exchange of information is reciprocal, and India also needs to provide information to other participating jurisdictions about their residents holding assets in India. For implementation of these schemes in India, provide relevant information to the Foreign Tax Authority. So that's all the important updates.